Hello everyone, welcome to your channel. Today we're embarking on a detailed exploration into Warren Buffett's perspectives on Bitcoin. We'll delve into 20 reasons why Buffett advises against investing in Bitcoin. This comprehensive analysis will provide you with a profound understanding of the Oracle of Omaha's viewpoint. Point 1. Lack of intrinsic value. Buffett's first point of contention is Bitcoin's lack of intrinsic value. Unlike traditional investments with tangible assets or cash flow, Bitcoin's value is primarily derived from market sentiment, making it a speculative asset. Warren Buffett doesn't see much value in Bitcoin, despite its recent price rise. The Berkshire Hathaway boss sympathizes, however, with people hoping to get rich quick off it. Something like Bitcoin, it is a gambling token, and it doesn't have any intrinsic value. But that doesn't stop people from wanting to play the roulette wheel. Point 2. Speculative nature. According to Buffett, Bitcoin is more akin to speculation than traditional investing. The absence of underlying assets or earnings to support its value places it in the realm of speculative assets, subject to market whims. Point 3. Extreme price volatility. Bitcoin's notorious price volatility is a significant concern for Buffett. The wild price swings not only make it challenging for investors to predict, but also introduce substantial risks, contrary to Buffett's preference for stability. If you told me you owned all the Bitcoin in the world and you offered it to me for $1.25, I wouldn't take it. What would I do with it? Buffett was quoted as saying by Insider. Point 4. Regulatory uncertainties. Regulatory uncertainties surrounding Bitcoin contribute to Buffett's skepticism. The lack of a central authority overseeing its operations raises concerns about its long-term viability and stability. If you and I buy various cryptocurrencies, they're not going to multiply. There are not going to be a bunch of rabbits sitting there in front of us, they're just going to sit there. And I gotta hope next time you get more excited after I've bought it from you, and then I'll get more excited and buy it from you. Point 5. Lack of tangible assets. Unlike traditional investments in companies with tangible assets, Bitcoin is entirely digital. Buffett prefers investments with real, productive assets that contribute to a company's intrinsic value. He said at the Berkshire Hathaway annual shareholders meeting Saturday that it's not a productive asset and it doesn't produce anything tangible. Despite a shift in public perception about Bitcoin, Buffett still wouldn't buy it. Point 6. Limited use as a currency. Despite being hailed as a potential currency, Bitcoin's adoption as a widely accepted medium of exchange remains limited. Buffett suggests that a reliable currency should have widespread acceptance and stability. Buffett's analysis of Bitcoin is mostly correct. Bitcoin is not a productive asset, and there's no good explanation for its price on any given day. However, it seems too early to dismiss Bitcoin as irrelevant. Though Bitcoin hasn't achieved the core functions of currency as a store of value, a medium of exchange, or a unit of account, that could change in the future. Ultimately, people, not governments, choose what becomes currency. If enough of the global population adopts Bitcoin as currency, it could gain real value rather than speculative. For now, though, it's clear that a value investor like Buffett would want nothing to do with Bitcoin. Point 7. Susceptibility to hacking and fraud. The susceptibility of cryptocurrencies to hacking and fraudulent activities is a considerable concern. Instances of security breaches and fraudulent schemes contribute to Buffett's skepticism. Point 8. Inability to generate cash flow. Unlike businesses that generate cash flow, Bitcoin does not produce earnings or dividends. For Buffett, investments should be in entities capable of generating consistent cash flow over time. Point 9. Potential for market manipulation. The decentralized and largely unregulated nature of the cryptocurrency market raises concerns about potential manipulation. Buffett cautions against investments in markets susceptible to manipulation. Point 10. lack of investor protection. Investor protections in the cryptocurrency space are limited compared to traditional markets. Buffett emphasizes the importance of investor safeguards, which may be lacking in the cryptocurrency landscape. Whether it goes up or down in the next year or 5 or 10 years, I don't know. But the one thing I'm pretty sure of is that it doesn't produce anything. It's got a magic to it, and people have attached magic to lots of things. Point 11. Impact of sentiment and speculation. Buffett underscores the influence of sentiment and speculative behavior in the cryptocurrency market. Investments driven by sentiment rather than fundamental value can be risky and unpredictable. Point 12. Potential for disruption by new technologies. The cryptocurrency market is susceptible to disruption by newer and more advanced technologies. Buffett emphasizes the risk of technological advancements impacting the value and relevance of existing cryptocurrencies. Point 13. Long-term viability concerns questions. Regarding the long-term sustainability and viability. Point 14. Lack of clear regulation. The absence of clear and comprehensive regulatory frameworks in the cryptocurrency space raises uncertainties. Buffett often emphasizes the importance of investing in regulated markets with clear rules. Point 15. Emphasis on fundamental analysis. Buffett advocates for thorough fundamental analysis when making investment decisions. His approach revolves around understanding the underlying businesses, their prospects, and their competitive advantages. Point 16. Inherent complexity. The intricate nature of Bitcoin and blockchain technology poses challenges for investors. Buffett often advises against investing in assets that aren't fully understood, emphasizing the importance of simplicity and clarity. Point 17. Lack of dividend payments. Traditional investments often provide income in the form of dividends. Bitcoin, lacking this feature, doesn't align with Buffett's preference for investments that generate consistent cash flow and returns. Point 18. Dependence on technology. Infrastructure Bitcoin's value is intricately tied to the stability and functionality of technological infrastructure. Buffett highlights the risks associated with investments dependent on rapidly evolving technology. Point 19. Limited economic moat. Buffett's preference for businesses with a substantial economic moat, a durable competitive advantage, is not applicable to Bitcoin. The lack of a clear competitive advantage raises concerns about its long-term viability. Point 20. Unpredictable regulatory developments. The regulatory landscape for cryptocurrencies is evolving. Future regulatory developments could significantly impact the value and functioning of Bitcoin, adding another layer of uncertainty. Conclusion. Warren Buffett's meticulous analysis of Bitcoin spans a multitude of concerns. Each point reflects the complexity and risks associated with investing in cryptocurrencies. As you contemplate your investment decisions, remember to conduct thorough research, understand the risks, and make informed choices aligned with your financial goals and risk tolerance. If you find this video helpful, please do like, comment, and subscribe our channel for more such videos. Kudos!